Alright guys, so today's update is extremely important. It's going to affect you, it's going to affect me. The new US economy is here. Trump is now the president and we are approaching the worst case scenario. A global trade war is about to happen. Now if we look at the past 3 years, it has been crisis after crisis. From the war in Europe to US banks collapsing, it has been a downhill ride. But what's coming could take the cake. We need to analyze what Trump has promised and how all his policies are going to flip the world economy. $33 trillion in global trade is now under extreme threat. And let's talk about the tariff war. Trump is going to keep his promise. He will slap a 25% tariff on Mexico and Canada. And this time he gave an exact date. The punishments will begin by February the 1st. So less than 2 weeks away. Now the justification revolves around the border issue to get the Mexicans to curb the flow of illegal migrants. But as we said many times before, it all revolves around bringing industry back to the US. Mexico and Canada, they are the biggest exporters to the US. They have an enormous trade surplus when dealing with America. Both economies export a ton of production to US consumers. And thanks to NAFTA, which is the North American Free Trade Agreement, Mexican imports have exploded up. It accounts for 15% of total US exports. A ton of Canadian goods are also coming into the US consumer market. It accounts for over 13% of everything. But what's shocking is the level of dependence here. Over 70% of both countries' exports are sold to the US. You can imagine the amount of leverage Trump has over both the Canadian and Mexican economies. Now, both these countries rely a lot on selling manufactured goods. Cars, for example, are built in both Mexico and Canada. Now, by closing off the US market, Trump can hammer the auto industries there. And that's just one example of the collateral damage. And Trump isn't kidding at all. Yes, a tariff war would ultimately hurt the US. But he made it abundantly clear during his inauguration address. This is the game plan going forward.
Instead of taxing our citizens to enrich other countries, we will tariff and tax foreign countries to enrich our citizens. For this purpose, we are establishing the External Revenue Service to collect all tariffs, duties, and revenues. It will be massive amounts of money pouring into our treasury, coming from foreign sources.
So what will happen to Mexico and Canada? Nothing good. Because of the dependence, a 25% across-the-board tariff will crush their economies. And here are the effects. In terms of GDP, all three countries, including the US, will suffer a hit. However, the economic damage to Trump's economy would be much less than his trade war targets. US GDP could drop by 0.25% by 2027 before normalizing to just a 10 basis points reduction. Economic growth would be slower. Canada would take at least 5 times the damage. GDP could fall by up to 1.25%. Long-term growth, this could contract by nearly 90 basis points. Mexico would be the worst hit. GDP could collapse by 2% at the worst point. By 2040, the economy would still suffer a 1.35% hit to growth. A trade war with the US could push both Canada and Mexico off a cliff. And we are talking about rolling recessions one after the other. And why is Mexico hit the worst? Because 40% of their GDP comes from exports, and 80% of those goes into the US. And once again, this is a story of countries being too dependent on one single market. This is one big global warning. But what about inflation? Would the US suffer more than Canada and Mexico? And this is where things get quite surprising. The tariff war could cause Canada's inflation to rise by 1.7% in 2025. For Mexico, it could reach 2.3%. But for the US, the increase might only be less than 0.5%. This looks very conservative. Inflation would most definitely be higher than these estimates. But why would US inflation be lower? And it all has to do with the US dollar and interest rates. The euro-dollar system in this case is going to insulate the US economy against inflation. I know it's not fair, but this is how the global system works. Well, their inflation is going to be lower, at least against Mexico and Canada. Now, what have we seen over the past few months? After Trump made his inauguration speech, the US dollar index flew even higher. In other words, global currencies fell. Almost immediately after his comments, the Canadian dollar and Mexican peso fell by over 1%. And in the world of currencies and forex, this is one tremendously big move in a matter of minutes. If Trump blocks access to the US market, revenue to Canada and Mexico would drop. That also means losing access to the flow of US dollars in addition to lower earnings. This is a double whammy, guys. Now importing their own goods, services, and inputs becomes more expensive. And there's nothing both countries can do about it. It's simply how the euro dollar system functions. So if your country is on the receiving end of US tariffs and you're dependent on US markets, you have to prepare for higher local inflation. There's no dodging this. That's coming to a currency near you. However, the US is starting to back off when it comes to China. This is very surprising here. Trump is calling for a study on the Chinese economy before imposing any tariff. If you were in the markets, you probably saw the effects. Chinese stocks went up quite a bit. Now, there's a lot of speculation on why Trump is holding back on the Chinese. Why promise tariffs on Canada but U-turn on China? Now, for sure, there are many possibilities floating around. Trump himself gave an ultimatum. He said the tariffs could be contingent on the TikTok deal. This could be a real possibility. Getting the app goes beyond just the Trump administration. I think we should all know this by now. It's probably some deep state or foreign policy agenda. Will ByteDance, which is TikTok's parent company, sell the app to the US? And will it end up in the hands of Elon Musk? There's a lot of uncertainty, but it seems Trump is tying the app to the tariffs. He said that the US should be entitled to get half of TikTok, and if Beijing rejected the deal, he could certainly impose trade tariffs. In fact, the import tax could be as high as 100%. This, of course, would be unthinkable. It might be a bargaining chip Trump thinks he might have. The US does represent 170 million users for the Chinese app, but is that really enough leverage? There's a good chance that TikTok would never ever sell to the US, because if they concede, it will be the rest of Chinese technology on US soil. It will be never ending. But let's take a broader economic view. Maybe the reason why Trump is holding back is the effect this would have on the US economy. Hitting China sounds strong, but this will backfire. In the same study, here are the effects of inflation of just an additional 10% tariff on Chinese goods. We can see something really interesting. China's inflation would increase by 17 basis points in 2025. It would then normalize all the way down to nearly nothing 2 years later. However, US inflation would actually spike higher than Beijing. It will increase by over 0.5% this year. Remember, this is just based on the additional 10% tariff on China. If Trump goes all out and does a 60 or even 100% import tax, this would backfire very badly. Inflation in the US would rise much higher than China. Now, I'm not saying that Trump won't do it. He's the ultimate wildcard. For all we know, by tomorrow, we would be in a full-blown global trade war. Realize how dependent the US is on cheap Chinese imports. Sure, the EVs, they aren't coming in. Solar panels and batteries are effectively blocked. But just take a trip to the grocery store and you understand what I mean here. Chinese suppliers make up at least 70% of merchandise in Walmart. America's supply chain is powered by factories in China, which make things very simple. If the US raises tariffs by 10%, prices in Walmart would rise by 10% or maybe even more. If a 60% tax happens, prices would soar even higher. And can Trump really do this? It would make the Biden inflation seem very mild. People and companies in the US, they are afraid of a trade war with China. So they are using a loophole to buy Chinese goods tariff-free. Over the last few years, Chinese exports of small packages soared to the moon. It went from $8 billion to nearly $20 billion annually. Any purchase that's below $800 can be brought into the US without tariffs. I'm sure this loophole will be closed, but it does signal how dependent the US economy is on Chinese industries. Another issue is retaliation from China, and let's get real here. If Trump's tariff gets high enough, China would hit back 100%. Now, the first step will be to inject their own stimulus to grow domestic consumption. But let's talk a bit about the tit for tat retaliation. What if China hits back on the US? What would the collateral damage be? And normally, I would say this would be an extreme outlook, but we are beyond that now. China countering the US is the base case scenario. In 2023, the US exported nearly $150 billion worth of goods to China. When it comes to services, it's over 40 billion. And behind that trade lies a ton of jobs. Chinese money is directly supporting nearly 1 million American jobs. In almost every industry, there's some level of Chinese exposure that could evaporate in a trade war. And here's the list of industries that would be most affected in a confrontation with China. And if you're in one of them, it's really time to brace for impact. The sector with the most exposure is US agriculture. Just in oilseeds and grains alone, nearly 180,000 jobs are on the line. Education is another one. If Chinese students start to leave, jobs in colleges and universities would evaporate away as well. Going down the list, we can see a lot of industries China can cut off dependency. Chips, aerospace, chemicals, all these can be made locally. A trade war retaliation isn't a myth here, guys. Trying to open multiple fronts is very risky, even for the US. The G7 might not retaliate fully, they can always roll over, but China is a whole different animal. Remember the level of support the Chinese economy has. They have cheap energy from Russia. Trade with the BRICS nations is also growing. And let's not forget two new countries that joined. Indonesia is part of the bloc while Nigeria is a new partner. More markets for China to sell into. Even amidst the decoupling, Chinese exports are still rising. In December, goods sold into the US grew by 2.6%. But compare that to Southeast Asia. China's biggest trading partner imported 5.4% more. So the largest part of the pie, which isn't the US market, is growing bigger and bigger. Really something to consider here. So we have to brace for impact, guys. We are on the doorstep of yet another crisis. Except this time it goes beyond Russia and Ukraine. Every economy on earth will be affected. It won't be anything pleasant or positive. It'll be the exact opposite. And yes, things could get even more unhinged.
And above all, China is operating the Panama Canal, and we didn't give it to China. We gave it to Panama, and we're taking it back.
But let me know what you think. Will the US punish the world with a trade war? Will Trump hammer China, or will he back down? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.